Hello everybody. Let's take a look at a couple of the exercises in chapter 12. Okay, so exercise 12.3. Fast Cars Inc. was authorized to issue 50,000 $1.50 preferred shares and 300,000 common shares. During 2020, its first year of operations, the following selected transactions occurred. So I'm not going to read down through them yet because Part A says journalize the above transactions. So we'll look at them one by one. January 1st, 5,500 of the preferred shares were issued at $13 per share cash. So we're going to debit cash, credit preferred shares, and the amount is going to be the 5,500 shares times the $13 per share, 71,500. February 5th, 15,000 of the common shares were issued for a total of $131,000 cash. So again, we're going to debit cash, credit common shares. This time we're given the amount, so 131,000. March 20th, 3,000 of the common shares were given to the organizers of the corporation regarding their efforts. The shares were valued at $29,300. So we're going to debit organization expenses, for example, and credit common shares. Now the amount, normally we would look first to see what the work was worth if we had the fair value of the asset or the service being given. But here they're not providing that. They're giving us the value of the shares. So that's what we use here, $29,300. May 15th, 12,500 preferred shares and 22,500 common shares were issued at $13.10 and $9.50 respectively for cash. So we debit cash, we credit preferred shares, and we credit common shares. Preferred shares are going to be the number of shares, 12,500 times the 1310, so 163,750. And the common shares, 22,500 times 950 per share, so 213,750. And then the total of that is the amount that we debit cash. December 31st, the income summary account was closed. It showed a debit balance of $334,000. December 31st is their year end. So the income summary had a debit balance, so to close it out, we credit the account and we debit retained earnings. Next, we are asked, let me scroll down. Next, we are asked to prepare the equity section as of the end of the year. So, again, make sure you include your headings, Fast Cars Inc. equity section of the balance sheet, December 31st, 2020. Contributed capital. So preferred shares go first. Preferred shares, we're given the information up here, $1.50. 50,000 were authorized, so we put that here. Then 18,000 shares issued and outstanding. We get that because we look at all the transactions. 5,500 preferred shares at $13 per share. So 5,500 shares, $13 per share, $71.50, and that comes directly from up here in the journal entries. And then there was more preferred shares, 12,500 on May 15th at $13.10. So the total then, we have 18,000 preferred shares, and the total of the $2 amounts is $235,250, so that's what goes here. Common shares, it tells us that there's 300,000 authorized, and then again the number that were issued and outstanding and the value we have to work out again. So February 5th, no, common shares, yes, February 5th, or I was looking at January. February 5th, 15,000 common shares, 131,000 in cash, so that's here, 15,131. March 20th, there were 3,000 more for 29,300. So again, 3,000, 29,300. And then there were more common shares here, 22,500 on May 15th, and they were for $9.50 each. So 22,500 at $9.50 each is $213,750. So the total number of shares and the total value, 374,050. So that goes here then for the value of the common shares. Then we total them up. Total contributed capital is the value of both of them combined. Deficit. This is because up here retained earnings was debited because it told us that income summary had a debit balance. Retained earnings normally sits in a credit balance. So if we debited retained earnings, that indicates that they had there's a deficit. So that would be a negative amount here. So it gets subtracted from our contributed capital and lowers our total equity. And part C. The preferred shares are described as $1.50 preferred shares. What does that $1.50 mean? That indicates that that is the dividend amount that's there to be paid. The dividend entitlement per preferred share, or how much each preferred share is supposed to get in dividends each year. So that is the amount of the dividend they are expected to receive or supposed to receive each year.